I'm with Bryan Pascoe from HSBC. Bryan, welcome.
Thank you.
The eurozone crisis is something we've been talking about a lot today. I mean, it's hard almost to call it a crisis. It's been going on for so long. Is it a new normal? Do you think it's a new reality for the markets that will last for a few more years?
I think in many ways it is. I mean, we've seen things drag on now for quite some time, and I think we don't really have a clear light at the end of the tunnel in terms of resolution around the banks and a way to solve the sovereign debt crisis. And clearly we now have some minor issues developing around the growth prospects in some of the emerging markets, and obviously that's an important engine of growth for the global economy overall. So I think we do have a new paradigm to deal with. That said, in many ways the markets are functioning normally. We've seen very, very healthy levels of emerging market supply this year. Corporates have been able to hit the market on a very, very regular basis, and some of the, clearly in the public sector, the better quality sovereigns and supranationals have also had a good degree of success. So I do think that we've moved into a new world order where headlines and volatility are very much the order of the day, but I think the market's shown quite a level of adaptability in being able to cope with it.
I've spoken to quite a lot of your I imagine they're your clients, the major issuers, sovereigns and corporates today. All of them said that there's been a flight to quality, yes, and of course they are fine, yeah, and all of that. But each of them has said that they've really changed the way they approach the markets to something where the windows of opportunity, generally speaking, are much smaller. Mm-hmm. They have to be able to react much faster and be more creative. From a banker's point of view, how do you? The way in which you work with clients, I mean, presumably it's become much more time sensitive. Yes. Is that something that you see to be continuing, and what does it mean for the way in which you run your business? Mm-hmm.
Certainly preparation is much more important than it was in the past. I think you're absolutely right. You have to be prepared and ready to move into very, very narrow windows of opportunity. I think sort of on that basis, direct engagement with investors through roadshows and teleconferences is a very, very important tool for helping to prepare for those transactions, to know what the investor feedback is around potential transactions and appetite for the credit, and how much investors are really willing to invest in different market circumstances. So it's definitely, I think, an environment where you have to be better prepared, where you have to be more flexible, and where borrowers really can't afford to wait for that extra day or two of market and spread performance if they feel that things are going to get better, because you never know what's around the corner.
Do you find, I mean, a lot of the borrowers that I've been talking to have been saying that they've changed their internal decision-making mm-hmm. processes, so they can get approval to issue. Yeah. Well, they can approve it themselves rather than having to put it to a board. Do you see that in the way with clients, that they've changed the speed at which they can react, that they understand this, and now that they can be much more sensitive and reactive to the opening of funding windows?
I think in most cases they've been forced to do so because of the nature of the market these days. But I think you still have a number of clients, and probably the majority now, that have shown that level of understanding and sophistication mm-hmm. and moved to that faster decision-making model. Mm-hmm. But I think you still have those who feel that the crisis is about to end, spreads are about to develop on a much, much tighter trajectory, and they can afford to wait. But that said, we're definitely starting to see a liquidity pinch from banks across the credit spectrum, even in some cases for better quality credits, although I think for the very, very best names, bank liquidity continues to be abundant. But certainly in our client base, we are seeing a slightly less complacent view on the need to access the capital markets sooner rather than later, and clients are definitely getting prepared to do that.
Do you think that when you're road showing non-sovereigns, is there always a question from investors about the state of health of the sovereign mm-hmm. under which the corporate is nominally domiciled, mm-hmm. or are investors really looking at global corporate names and saying, well, the credit story is not really tied to the sovereign, so we can look at that in a different way? I mean, I suppose what I'm saying, are investors becoming more selective as well?
Yes, I think it's case by case. I mean, we've seen a good level of issuance from peripheral corporates this year. When market conditions are better, in many cases there's been a decoupling also, where the corporate credit spread trades much, much tighter than the sovereign itself does. And so I think that's been quite a healthy dynamic, and that investors are willing to look through the sovereign in many, many circumstances to see the true intrinsic value of the corporate credit. That said, clearly the more domestic credit profile in terms of the revenue generation, in terms of EBITDA, etc., that any corporate client has, the more of an impact the sovereign rating and the sovereign correlation will be.
And finally, the global borrowers. This is, I think, our 22nd or 23rd year. You've been here a number of years. What do you think about the conference? And should we look to see you next year as well?
We'll certainly be back. It is an excellent forum, I think, to get together with clients and peers, and to listen to some of the speeches and presentations as well, and get to test the pulse on what's going on. So hopefully long may it continue.
I hope so too. Bryan, thank you very, very much.
Thank you. Thanks.
No problem at all.